What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital FX. Today, we want to simplify the issue of top-down analysis. We want to really explain how to do your top-down analysis using this Euro USD chart from AAA FX. So, guys, if this is something that you would want to know or that you'd want to learn, just stick around, subscribe and watch the full video. Guys, if you are new to this channel, we talk about ICT, everything institutional trading, BTMM, and everything you need to know about trading. So today we are back on top-down analysis. A lot of you guys have been asking me questions on how to effectively do top-down analysis. So if this is something that was troubling you, this is your video. So many of the times, especially if you are a beginner, top-down analysis can have a toll on your trading or a toll on your mentality, the issue of not being able to do proper top-down analysis. So I've seen most of the guys are doing top-down analysis on smart money concepts and everything, and they have been getting it wrong from my point of view. So I'm going to show you the easiest way of doing top-down analysis that fits every trader. You understand, from a beginner to an established trader. So we are going to be, so if you want to do top-down analysis, proper top-down analysis, you have to choose at least two pairs, right? You have to choose at least two pairs that you look at, you analyze those two pairs, right? Not two pairs, sorry, we have to choose two time frames, right? Two time frames that you analyze. So what you are doing is you have to choose the directional time frame and the entry time frame. So from what you are seeing here, I'm choosing the H1 as my directional time frame, and I'm choosing the M5 as my entry time frame. You can do the same with H4 and M15, right? But I like my entries on the M5, so I'm going to use the H1 and the M5, right? So let's start here. When this breakout structure did happen here. So this was price in a range. From here, this was the range. So price was ranging. Then it took out structure at this particular point. When it did that, it gave you or it reviewed the decision that it had taken from this range. It's either it was going to break up and continue going up, or it was going to break down and continue going down. So this is the decision that we know price is giving us. So from that, you understand that the direction from the H1 is bearish. So with that as a guideline, you are going to be going to the M5 and try to get sell trades or to get bearish momentum looking like setups. You understand? So if you go to H1 here, you see that we have these retracements, we have these retracements. So you might be asking yourself, what can I do to not be caught up in that retracement? So you go to M5 here. What do you see? You see these aggressive looking retracements. Then you see these are your order blocks that are guarding your directional bias. So if you go to H1, you see these ones. You have to understand something that is called a range. So let me go. If you look at this, you will see that when price is moving up, down, up, right? So these are retracements, right? These are retracements. So let's say, for example, you are looking at an H1 chart and it's giving you bullish vibes. So what you do is you look for what we call a range, that is a low and a high. So this being a low, this being a high, this is a retracement. This being a low, this being a high, this is a retracement. So what we are doing as traders here is you are looking at this range and you are looking at getting your buys from the discount levels and getting your sales from the So if you are in a bullish trend like this, you don't need to worry about the premium levels. You just worry about the bullish. So when we go up aggressively, then we retrace. Look at buying after this 50% zone has been taken out like this. You look for buy trades in this half of the of the trend. So this is what we are trying to do. So when price is going down like this, you draw a line to halve the range, right? So when price gets to the other side of the half, you look at selling. And when price gets to the when price is still trading on the other half, you don't do anything. So let's look at this as an example. You have price at this particular point. This is the H1, right? You are doing top down analysis, but you are starting on the directional time frame. So this being your half, you look at buying in this zone, right? This is your buy zone, right? If you do that and you go to the M5, you won't be having any problems, because on the M5 you'll be looking for on the M5 you'll be looking for setups or order blocks that can give you a buy in this particular zone. So you don't have to worry about getting buys or getting order blocks in the H1, or getting your trades from the H1. You don't have to worry about points of interest. You don't have to worry about anything. You just have to know whether it's going directional wise. Then you go to the M5, you look for you look for your trade. So on this range thing, after a break of a high like this, a new range is in play. So a new range is determined by a low and a high. Then this is the range. So it's either you start from the 50% level or below the 50% level, in looking for your trades on the M5 time frame. So this is what we are doing, and this is how we are looking at getting our trades based on this top down analysis idea. So you don't have to be refining everything. Just get the direction from the higher time frame, then go to the lower time frames and try to find trades. So if you come here, this is the and this is GBP AUD. So from GBP AUD, you can see that price has been trending downwards from here, from this point. When it took out this low, it was an indication of a change of a change of trend. And you'll be looking at this and marking out your ranges and looking for trades on the M5. So this being your half point, this would have been a trade that you could have taken from the from the M5 time frame. And look at this. This was a very beautiful order block that you could have taken advantage of again, and look for trades that could have paid you. So this is what you are doing. You go to GBP, JPY. This can work on any pair, but the secret is in identifying the time, the price, and sticking to one method, sticking to a handful of pairs that you can manage closely. So if you want to do this on Nasdaq, the theory is the same. You are in a downtrend. What do you do on M5? You go on M5 and look for order blocks that give you sell opportunities. You understand? You look for order blocks that give you sell opportunities like this. You understand? This is what you are doing, and this is how you are looking at these trades, and this is how you are looking at trading. So this is an easy way of doing top down analysis. You can do it from H4. You do the same downtrend. You go, you identify your ranges, and you identify your parameters in terms of the 50% zones, the premiums, the discounts. You go to M15 and you look for your trades. So this is what I had for you guys today. I'm Shocks, and I'm out. Trade